The meeting of the Fiscal Affairs come to order. The first item of business is approval of the minutes from our last meeting on November 4th, which Peter Pantaleo actually chaired.
Moved it.
Moved it. Any questions or comments? Seconded? Changes? None? All in favor? Aye. All right. Action item 1B is a resolution requesting that the board of the City University of New York authorize the General Counsel to execute a contract on behalf of the university to provide audit, tax, and advisory services for fiscal years 2014 through 2019. The contract shall be awarded on the basis of best value to a responsive and responsible offer after public advertisement and timely submission of the sealed proposals pursuant to law and university regulations. The RFP solicitation and the evaluation process shall be conducted by the university. The initial term shall be for 3 years, and the contract shall include up to 2 one-year options for the university to renew in its best interest. Such purchase shall not exceed a total estimated cost of $2 million during the initial term of the contract. I'll move the item. Do we have a second?
Second.
Questions at all for staff? Am I to understand this, that the RFP process has gone on already, and or is it's in process?
The RFP process is going on already. We've made a recommendation to the State Controller's Office about the vendor that we're selecting. And the other thing I just want to point out, Chair Loader, is that at the audit subcommittee meeting that we had on December 4th, that we also had a discussion about this item and the audit subcommittee in terms of the audit perspective as to moving forward on this item.
Okay. Are there any other questions or comments? All in favor, say aye.
Aye.
Any opposed? Action item carries. Action item C is a resolution to authorize council to execute a university-wide contract with Konica Minolta, which will not exceed a total estimated cost of $1.5 million. Nearly 2,000 Konica copying machines, and the continued operation of this fleet is critical to day-to-day operations of the university. Konica has provided the required maintenance services to the university under a New York State Office of General Services contract, which has now expired and has not been renewed. To prevent the interruption of services, Konica will continue to provide these services through June 30th of this year. The university will conduct a competitive procurement to provide these services as of July 1, 2004. I'll move the question. Do I have a second?
Second.
Questions? So this is just for a 6-month period of time to get over to the RFP process.
Yeah, and just a brief background on this. This is really the result of an initiative that the governor started on strategic sourcing for the entire state of New York. The state has contracted with Accenture to help them do strategic sourcing for all of their commodities statewide. And as a result of that, the state has allowed current contracts to expire. And the university had always piggybacked off the state's Konica Minolta contract for copiers. That contract's now expired at the state level, and so we need this 6-month agreement to get us through the remainder of the fiscal year so that Konica Minolta can continue to provide services. We are going through the RFP process and the selection process for these services going forward, starting on July 1st, 2014. But we do need this resolution to get us through the interim period for the rest of the fiscal year.
Okay. Any other questions, comments? Yes, Professor Martel.
Is it reasonable to expect that, are there a lot of people that will service Konica machines other than Konica?
Yeah, I think in that industry, yes. If we do go with a new vendor starting on July 1st, that normal practice is that if we still have Konica machines, that they'll continue to service those.
All in favor, say aye.
Aye.
Any opposed? Motion carries. Action item D is the resolution authorize council to execute a university-wide contract with the Johns Hopkins University Press for online access to the Project Muse Standard Collection, a unique not-for-profit collaboration between libraries and publishers supporting a diverse array of research needs at academic libraries worldwide. CUNY has been utilizing Project Muse for many years, and it is an integral resource for the colleges. This renewal shall not exceed an estimated cost of $600,000 and will provide continued access to Project Muse from January 1 of this year through December 31st of 2016. I'll move the item. Do I have a second?
Second.
Any questions? Okay. There being none, all in favor, say aye.
Aye.
Any opposed? Motion carries. Action item E is a resolution authorized general counsel executing another university-wide contract with the American Chemical Society for online access to its collection of academic journals. The university has been utilizing this subscription for many years, and it is an integral resource for the colleges. This contract shall provide access for a period of 3 years from January 1 of this year through December 31 of 16, and shall not exceed a cost of $863,000. I'll move the item. A second?
Second.
Item has been seconded. Any questions for staff? There being none, all in favor say aye.
Aye.
Any opposed? Motion carries. Action item D is a resolution to execute a contract on behalf of Brooklyn College to purchase multimedia equipment and installation services for smart classrooms. It's a good idea. Such purchase shall not exceed a total estimated cost of $3.1 million for the initial 3-year term and up to 2 one-year renewal terms ending on June 30th, 2018. The college retrofits 20 to 30 legacy classrooms here with smart technology capabilities, but there continues to be more demand for smart rooms than the college can meet, and the ultimate goal is to facilitate advanced technology-assisted instruction and to enhance pedagogy and learning for students in all instructional spaces. I'll move the item. Do we have a second?
Second.
Any questions, comments? Are all the universities putting in smart technology capabilities?
Yes.
All the way across, all the colleges? Okay.
Mr. Chairman, one question. Who's the provider? Who will we be entering into
provides
the
this?
contract with?
We have the Chief Information Officer of Brooklyn College, yes, Mark Gold. We'll call on Mark.
I believe the contract is being awarded to a company called EdArt GTI. There was a bid, extensive bid, and I believe they are the low bidder.
May I ask another question?
Sure, go ahead.
Do we have experience with this provider?
We have used them in the past, a long time ago. We had a previous where the vendor unfortunately did not follow state rules and was removed from the contract. So all the vendors actually that bid on this were better vendors that had worked with us in the past. They've also done some grant work with us. We have not had anything to scope with them, but they're a known provider of this type of equipment.
Thank you.
You're welcome.
Any further questions? There being none, all in favor say aye.
Aye.
Any opposed? The motion carries. Now we're on to the information items, and we have an update from our Chief Investment Officer, Janet Crone, on our portfolio's performance through November 30th.
Thank you. Happy New Year, everybody. And it was a good year for the investment markets as well. If you turn to page 5 of the Cambridge report, where it it's on the asset allocation policy. This would be it's actually page 6. I just want to briefly go over the asset allocation. We basically have an asset mix of 85% equities and 15% fixed income. In the U.S. equity area, we've targeted an allocation of 26%. We're slightly above that, primarily due to the market appreciation in U.S. markets this year. The non-U.S., which is our international equity component, we've targeted 21%, and we're just about right there. Emerging markets, we have a target allocation of 10%, and again, we're just very slightly under in that category. Hedge funds are targeted to be 13%, so we are slightly under by about 1% in that area. Public real assets has a targeted allocation of 10%. and the private area has a target allocation of 5%. As you know, we made our first investment in the private equity area last year, hiring NCAP, but it being a hire just a year ago, we're very early in the J-curve effect. So there have been a few capital calls, which will continue to occur over the next 3 to 5 years before we really even see any returns in the private equity area. Fixed income, as you know, we had talked about lowering that allocation given where interest rates are headed. We did lower it from 20% to 15%, and we anticipate that we will probably lower it to 10 at some point this year. Turning to go about 5 pages forward. I'm not sure what the pages are. I apologize.
Which one do you want?
I think it is page 12. 12,
The last return, Sarah?
yeah.
Yeah, it's page 12.
And again, we don't have year-end results because they come to us with a lag. But I can say that the estimated return for the year is probably about 12.5%. Our overall return for the 11 months through November is about 1% less than that, so about 11.5. On an absolute basis, you know, we think that's great. We're not quite as satisfied on a relative basis. So one of the things we will be doing this year is to address the manager structure primarily within the U.S. equity area, and I'll go a little bit more into that. But the biggest performance last year was the domestic equity and the non-U.S. or the international equity. And the biggest detractors were emerging markets and fixed income. We were able to limit the damage in the fixed income area because we have a shorter duration than the market, so we're less sensitive to changes in interest rates. But just going briefly down the page, I know this is a late meeting for everybody, so I won't belabor all the issues, but I do want to point out certain issues so that you're aware that we will be addressing this year. First of all, in the U.S. equity area, as I said, we are below benchmark. The reason for that is primarily because we have a very small allocation to small cap equity. And as you know, small cap stocks really outperformed this past year. So it's not to say that we're happy about our allocation to small cap, because we actually think that it's overvalued. So when we look at the manager structure this year, we'll certainly be looking at that and taking that into consideration, because we might, for example, want to look at more of a mid-cap allocation, which historically has done well consistently. But next year will be the first year it doesn't, now that I've said that. In the international equity area, we had an absolute return of 15.5%. By way of background, all of the managers in this space are conservative and have a quality bias. And one of the managers, International Value Associates, has a global mandate. So they have a cash position, and they had a big gold position, which underperformed last year. So we got hit in this area, but again, looking on the brighter side of things, the absolute numbers are, I'd take 15%, but we're really not happy with that. So we'll, in the process of looking at the manager structure, we may also look at this as well and try to add more growth managers. But we don't want to over-diversify, but we will be reporting back to you on that. In the emerging market area, as you know, this has not been a good year for emerging markets. We've done very well in the past in this area. but it was just not a good year. It was underperformed the benchmark, primarily in our portfolio because of Aberdeen, which again has a quality bias. So in all markets, you really didn't see that quality was rewarded. In the hedge fund area, we had an absolute return of 9%, which was really significantly above the benchmark, so we're very pleased there. And in the public real asset area, the problem child is really Wellington, and that's another area, or manager rather, that we do want to look into. We started off with a diversified basket approach with that manager, as it was our first exposure to that area, but we are a bit concerned. However, our investment in Harvest, which is the MLP infrastructure fund, has done exceedingly well. That leaves fixed income, which I've already discussed. We're a bit below, but not as much as we could have been if we hadn't shortened the duration. So again, the overall return for the year is about 11.5. We expect for the full year it will be 12.5%. That's an estimate, though, at this point. So that is my presentation, and I'll take any questions that you may have.
Are there any questions?
Not a question as much as a comment. We set an asset allocation and we allow some variation within it, but I don't think we're expecting anyone to be a market timer. I get a little bit concerned. I'm glad we shorted duration because rates went up, and that's a nice thing, but I don't expect you to be able to figure out when to shorten and when to lengthen the duration. We set an asset allocation. We ought to be comfortable with what we set and live with what we live with. Otherwise, I'm afraid we will not do what we're supposed to be doing.
Good point.
Any other questions? Thank you. And finally, there are some report from the subcommittee on audit, which met on December 4th, and I'll read the comments. Shelley Massey and Jean Usanio, both from KPMG, presented a draft year-end financial statements and the results for fiscal year 2013 audit to the subcommittee on that date, December 4th. They also shared copies of the 2013 Higher Education Industry Outlook Survey put together by KPMG and the Audit Committee's Institute information with the committee. During the presentation, KPMG indicated that there were no changes to the audit plan and there were 4 open items. The open items have since been completed, and the audited financial statements were issued on December 16th of last year. KPMG reviewed the audit results and indicated that there were no corrected or uncorrected audit adjustments identified during the audit. KPMG pointed out the changes to the audit opinion, which include headings to the paragraphs, and instead of a qualified or unqualified opinion, the auditor's opinion is now either not modified or modified. Excuse me. Apologize. KPMG has no other significant matters to report and indicated the independence between the City University of New York and KPMG, and that no management services were performed for CUNY by KPMG in fiscal year 2013. The February Audit Committee, at that February Audit Committee, the management letter and the A-133 audit will be reported. KPMG indicated that there were no management findings from the current year. There are a number of questions from the committee and several requests for clarification of future enhancements. The committee accepted the financial statements and requested that they be issued as soon as possible. The financial statements were issued on December 16th, as was stated above, and copies of KPMG's 2013 Higher Education Industry Outlook Survey is available for anyone who would like one. That concludes our meeting. Before we do, yes, some questions?
I just want to bring to this committee's attention that the FSA committee has been assigned the task of developing a investment policy statement for the optional retirement program and deferred annuity plan. And several questions have the committee asked why that wasn't being done at the Finance Committee meeting, but I think Vice Chancellor Waters addressed that. But having said that, we think it's imperative that we have access and work closely with the Finance Committee and the expertise that lies within your cluster to develop how we will be developing the protocols, et cetera. And Professor Martell has graciously agreed to work with me on a subcommittee to develop protocol as to how we will be moving forward. So I ask for this committee's assistance in lending your expertise in how we do that going forward to best serve the best interests of the university.
Okay.
And just because the responsibility is bifurcated between two committees, that doesn't necessarily mean that the staff has to be, right? So I assume we'll have access to the same set of professionals that, no, huh? We're on our own. I understand. All right.
We've been in discussions with Vice Chancellor Waters about this issue for several months now, and our Chief Investment Officer, Janet Crone's been working closely with Vice Chancellor Waters' staff. So, yeah, I think it's a terrific suggestion, and we look forward to collaborating with that committee.
Thank you.
I have a question. This week, we've got the State of the State address. Jay, have we heard anything that might be in there? Because I know stuff that's coming out.
No.
I don't believe it. And also, what is the expected timing, do we know, of the governor's budget? 14th?
No,
No, the
It's
mayor's
a-
budget will be the
The
14th,
governor's budget is either going to be the 21st or the 22nd of January, so in 2 weeks.
in 2 weeks.
So at our next meeting of this committee, which is on February 3rd, we'll report what the results of the governor's executive budget was. And certainly, we'll have an analysis done before that we'll send out electronically, but we'll be able to report on it this
Great, look forward to it, look forward. And one final thing, Barry Schwartz is now a member of the committee. I want to welcome you. I should have done that up front, I apologize. This was not the most exciting of meetings. They do get exciting when we get into the budget season. With that, I'll entertain a motion to adjourn.
Move it.
Second. Thank you.
Thank you.
Especially exciting when we raise tuition.
Camera?